Hi there, welcome to Immigrant Dream, and this is your host, Mary Ann Morales. Our topic for today is about why saving money is not the best strategy for retirement. And I'm going to explain that in this case. We've been told that saving money is the key to a comfortable retirement. Well, the concept of saving for retirement began with the introduction of pension plans in the late 1900s and early 20th centuries when life expectancy at that time was much lower, right? So the modern retirement system right now, including the government programs like Social Security in the US and the Canada Pension Plan, they were designed based on the assumption that people would retire at age 65 and will only live only a few years after. As you already know, times have changed, right? People are living longer. Also, inflation is constantly eroding the value of money, and relying solely on savings is no longer a practical strategy. Most people don't even know how much they'll need in retirement or how much they should set aside each month. So let's have a simple math exercise. Let's take an example, a 45-year-old who wanted to save $50 per month for her retirement. You are going to compute that. We have to identify first, when are you going to retire? So let's say you want to retire at age 65. So you subtract that 45 to 65, so you'll come out with 20 years, right? And then multiply the number of years um, by monthly savings. Let's say $50 times 12 months times 20 years. This is equivalent to 12,000, assuming you earn 5% annual return. So how much will they have, right? So even with some interest, this amount is far enough to cover even basic living expenses, especially if they still have to rent or pay their mortgage. So exercises like this is very simple. This can help you realize that saving alone is not enough. And here's why. Number one is inflation reduces your buying power. The money you save today won't have the same value in the future. Let's say a cup of coffee that costs you $2 or $3 today might cost $7 in 20 years. If your savings don't grow at a rate that outpaces inflation, purchasing power lessen, and you may struggle to afford basic necessities, right? Number two is you might outlive your savings. Many retirees, as you can see, live well into their 80s or even 90s. If you retire at age 65 with a limited amount of savings, what happens if you live for 30 years more? Without an income source, you can run out of money before you reach the end of your life. Number three is savings only generate limited or no passive income. A saving account earns very little interest, right? If you check your bank account, you will see that it doesn't earn you much. If you're earning just less than 2% per year, right? Even if you are investing in low risk option, like for example, GIC, it won't provide enough growth. Retirement should be about financial independence, which means having passive income sources that generate money even when you stop working. Number four is unexpected expenses can wipe out your savings. This is very true, right? We have so many unexpected events in our life, like for example, medical emergencies or home repairs. These are all unexpected, and it can quickly drain your savings. Without a backup plan or an alternative income stream, you may be forced to return to work or rely on government support, which may not be enough. Number five is taxes and government benefits may not work in your favor. Well, some people assume that government pension like CPP or old age supplement in Canada will be enough. However, these benefits are often taxed, and if you have savings, it can reduce the amount you qualify for. So, depending on your country, saving money in traditional retirement accounts could also mean high taxes when withdrawing funds. So, what's the better retirement strategy? Well, instead of just saving, you should be focusing on building assets and passive income stream. Here's one example: you paying stocks or businesses which can generate income even after you retire. You can consider life insurance with an investment component. Some policies allow your money to grow while also offering financial protection. It's time to rethink the traditional approach to retirement. Instead of just saving, start investing and build wealth so you can retire without financial stress.